Welcome to the SparkCom podcast. My name is Manny Turan, and I'm with
Adam Hartung.
We are with Spark Partners. You can find information about us at sparkpartners.com. And on today's episode, we're going to talk about some very interesting, very relevant topics surrounding what happened with GameStop, the Reddit users, the big hedge funds. And so let me get your first take on what happened there, Adam. And then I've got a couple other topics for us to discuss.
Well, we talk a lot about companies that get themselves into trouble because they get off the trends. And so the way the financial community deals with that is if it's a publicly traded company and they see somebody off trend, they'll short the stock, meaning they'll sell the stock that they don't own. The idea here is I'll sell the stock, say for 100, and I'm expecting it to go, I'll buy it back at 80 and I'll fulfill the order. So, I made 20 bucks because I sold it at 100. Didn't even own it, but I sold it at 100 and then I bought it back at 80. So that's called a short. And what happened was GameStop, which was a traditional retailer of games, meaning it had brick and mortar stores, was falling out of favor, wasn't doing very well, probably going to close some more stores, all the traditional stuff we talk about in retail. And so what happened was there were a number of financial guys out there that they went ahead and shorted the stock, on the idea it's going to go down. But then what happened was somebody's, not just some one body, but several people started to see that this had a very high position of what we call short interest, which means that you took all the stock that's available to purchase, say 1,000 shares, and they noticed that 25 or 30% of it was shorted, which means that there's a lot of people out there going to have to buy it back at some point. And so what they did was they started buying the stock, meaning that eventually those guys have to cover those short positions. Eventually they have to buy that stock to deliver those shares. And if the stock doesn't go down, they still have to buy the stock to cover the shares. So they said, wow, with so many shares shorted, there's not enough shares out there. I'm going to start buying it. And it had the inverse relationship of driving the stock price up. So now what happened was instead of going from 100 to 80, it goes from 100 to 105 to 110 to 120. Now what happens is you get what's called a short squeeze. And that means that the fellows that are sitting there on the short interest start to have margin calls because whoever they place the order with says, hey, wait a minute, you have $100,000 of credit, but now that stock price has gone up so much that it's exceeding the amount of credit we're giving you. You got to cover that position. And so they have no choice but to buy the stock, even though it's out of the money for them and they're losing. They bought it at 100, they sold it at 100, they're buying it at 110, 120. And then that starts to cascade. Now what happens is everybody's starting to go further and further down that road. In the case of GameStop, they actually got to the point where they had shorted so many shares, they'd shorted 140% of the outstanding shares. What that means is there were more shorts than there were shares to buy. So now what happens is it starts to get worse and worse because now the guys are covering shorts and and there's not even any shares out there, right? Somebody's bought it and they hold on to it. So we start seeing this thing go up, not 10%, not 15%, but 2 times value, 4 times value, 16 times value. So the thing just escalated completely out of control. That was what happened. Now, the interesting thing was who did it? And it turned out that they knew that this platform called Robinhood, which has a lot of really small investors on it, had a lot of people that were doing the buying. And so the first reaction was kind of like, wait a minute, did Robinhood cause this to happen? That's pretty unlikely because it takes so much money. And most of your Robinhood investors are buying 5 shares at a time, right?
Yeah, right.
So they're not actually able to make it happen. But what did occur was those guys started making some money. Somebody that had there was one story of a guy who put in 60 bucks and made $3,000. Because this thing just shot up like a rocket, right? So that's got everybody's attention now. They're starting this, and then what happened was Robinhood had so much volume on this that in fact it exceeded their entire trading platform's credit limit. And they had to go out and borrow $1 billion to keep the platform open. And that's how out of control it was getting.
Out of control.
And so they then had to shut down. And they said, look, we're not going to trade GameStop anymore. Well, then the little guys were like, oh, this is the little guy getting screwed again. Now here we are, we can't put our shares out because you're limiting our trades. And right, it was true because Robinhood wasn't big enough as a platform. It wasn't, Merrill Lynch or, one of these giant trading platforms, TD Ameritrade. They just didn't have enough capital to cover the volume of the shorts and the covers that were going on in that particular stock. So that's the story.
Yeah.
That was what happened. It's kind of interesting to me because if you look at who the players were, one, you have a player, GameStop, is probably not even going to be in business in 5 years, right? So you have to sit there and say, those guys at that company were scratching their heads like, this is the worst of all possible worlds. And they probably were like, could we just shut the company down and sell all the stock today? Because our stocks were way more than the company's worth.
Yeah, absolutely.
At the same time, then you had, there was one fella, one small private equity firm that had taken a bunch of short positions, lost 50% of their capital in the entire private equity firm in like a week.
Yeah.
And then you had some small guys on Robinhood that were making, 400, 500, 800, 1600% on their positions, small positions, but making a lot on them. And it started to, Joe, I think it started to show us just how much the industry has changed, right? In the old days, if you wanted to have a brokerage account, you had to go to somebody like a Merrill Lynch. You had to put money up, and then you had to show your financial worth. You had to send them, a lot of verification of who you were, and then you had the permission to start to do some trades. And all your trades got looked at.
Yep.
And it wasn't that many long ago. If you went in to buy something, you couldn't place the order unless somebody looked at the order to make sure that it was a verifiable order and that it would, you had the capital and everything to make it work. Well, now we've come so far from that. Now we're in this world where even if you're working with a big outfit, you're probably doing most of your trades online. I can remember if I bought 100 shares of a stock, I had to pay $100 commission or more, right? Now you buy stock, it's either $4 or in the case of Robinhood, it's free. You don't pay any commission at all, right? And so you have so many different players here from the Ameritrades and the Merrill Lynches of the world, Merrill Lynch now being part of Bank of America, by the way, that, they're all looking at this like, wait a minute, what's going on? And what it shows us is it shows us how the trends have gotten away from the regulations. Nobody would have thought this could happen. They would think, well, there's plenty of regulations out there. Wouldn't the regulations keep something crazy like this from occurring? And everybody at the end of the week said, whoops.
Yep.
It didn't stop.
Oops, exactly.
And now they're really wondering, like, well, do we need new regulations? Do we need to get Congress involved here and pass some new regulations? One of the issues is, for example, this whole idea of this online banking, right?
Yeah, exactly.
Like I said, it wasn't that long ago. If you wanted a bank account, you had to walk into the bank and you had to give them a driver's license. You usually had to give them a social security number.
Yep.
And, you gave them all this information. They figured that you were who you claimed you were, and then they would open up an account. That still didn't mean they're going to loan you money.
It's a different story. I'm holding two debit cards here from banks that have only online presences. I mean, it's amazing that I started these business accounts, sending information, scans and pictures of my license and so forth. And these guys are really aligning with the emerging trends. And it's going to be interesting. I share with my kids about how the things are now and where they're going. And certainly the brick and mortar banks are really going to take a big hit. Just walking into a Chase Bank a few weeks ago, there was 8 teller stations open or actually in place with only one teller at one of them. Yeah. And there was 2 big machines where you go there if you need cash, you can kind of do all your stuff with these machines. And even cash is one of these things that's certainly an idea. And, I kind of full circle, I tell my kids that the most powerful thing on earth here is the human mind. And what comes from the mind is ideas. And ideas is what leads to war and what leads to what happened with Reddit and GameStop. It's all an idea. And of course, regulations try to curtail those. But ultimately, like you said, the trends are out performing, if you will, the regulations. Regulations are not keeping up with the trends.
It wasn't even 10 years ago that I set up a company, and it was a Texas corporation for the purpose of doing some oil and gas investing. And it was all very legal, a real Texas corporation, gave them my social security number, did everything we did to set up, got a tax EIN number with the US government. But some of my investors came from Europe. right? And so what happened was I was getting cash transfers in from Europe, and I was going to have to make cash transfers out to the investors back to Europe. And I could not get a single bank to open an account for that business. They said, you have a business and it's a Texas corporation and you want to pass money back and forth to Europe, we will not let you open an account. And it took me weeks, and I finally got an account with UBS, right, which was actually not a U.S. corporation itself, but actually, I believe it's German, but
German or British, I forget.
Yeah, it's European. Now think about that. So that happened. That was 18 years. I had all this problem. You don't have that problem today, right? Now you want to go out and set up your business and get it going. What we've done is we've reduced a lot of the friction. So I think what our listeners need to be sure they're thinking about is, what does this mean for kind of like me and what I do? And the first one I would say is, well, pay attention to, do you know what you're doing when you're investing, right? So like, did you know if you're out there and you're buying some shares on Robinhood or one of these other exchanges where you've got very, very low to no commissions, are you buying just on a whim, or do you know what you're doing? I don't think you have to have deep knowledge company to buy the stock. I think you need to know what are the trends and is it on the trend. You probably ought to do some research and find out like what's price to sales ratio is, something about its valuation. And then you can make some investing. But if you've done that, then you would be aware of a situation. You need to know like, well, this company selling the stocks $5 a share, and I think it's undervalued. Well, what happens if it goes to 100?
Yeah.
Are you going to just sit there and do nothing? Or do you do like some of these people in Robinhood and you say, wait a minute, this is crazy. Let's get out and take our money and run.
Yeah.
So people should be paying attention to their investments. And the second thing is, if you're a small business person, you need to realize there's just so much less friction now, right? You can go off and you can open accounts, you can get into business, and you can open your bank accounts, you can get credit, you can you can move transactions. I can remember when if you're trying to take a credit card from somebody, you had to have an account at the bank. You had to get what's called a merchant account. Then you had to sign up with like MasterCard or Visa, and you had to pay them a fee, right? Usually a pretty healthy fee of like $100 a month, 5% of the credit card. I mean, if you had a transaction that was under $50, you had to pay, a minimum like a $3 fee on the transaction. It just was impossible as a small business person to try to set things up. Now we've got Square. We got PayPal.
We have Zelle. Do you use Zelle?
Yeah.
Venmo. Yeah. What's funny is a number of years ago, I was in Mexico on the beach, and there was a person walking around selling tacos, and they had a small little sign that they made that they accepted Venmo. Right. They were right on the edge, and we all kind of laughed because it's like, well, Venmo, what is that? So it's all changed, right? It's all going in that direction, and being able to buy and sell products and services through your cell phone. I know that in Africa, it's a way bigger deal than it is here. Cash is paper cash, and coins are becoming more and more rare, and it's all being done via cell phone, and it's going to continue to grow. There's another trend with going away from the actual physical tender to all online.
Yeah. And so, you have to think about, if you've got a wallet with $1,000 in it, okay, you're a potential crime victim, right? If you're walking around with a phone with a Venmo account, you're less of a crime victim, right? Because people can take that $1,000 out of your pocket, poke you in the nose, take the $1,000 and walk away. If they poke you in the nose and take your phone, there's not much they can do with it anymore, right? You can't get into the account, you can't do anything. And so we have to, that's the trend. The trend is, why would a place like Nigeria, why would they do that? Why would they do that in Mexico? Well, if there's crime and you have to worry about crime, this is a safer way to do business. That guy on the selling the tacos, he had to risk that at the end of the day, if he had $300 or $400 of U.S. currency, these accumulated from these American tourists, somebody might pop him in the nose and take the $300.
Yeah.
But, if you made the purchase with Venmo, it's in the bank, and, he's far less likely to have somebody attack him. And so those are the trends of trying to get people to understand. And when you see something like that, like a Venmo at the beach, you can kind of chuckle, as you said, you can start saying, but why? Why would that happen? What is that telling me about what's going on in the world? And, so that's one side of it. The second side is, what does it mean for the regulators, right? There's going to be regulators crawling all over this GameStop situation, and they're going to start
big time.
Yeah, so they'll probably come up with different rules. Is it going to go back to what it was 10 years ago when I couldn't open an account because I wanted to do international transfers? At that time, it was all Dodd-Frank was the name of the law that they'd passed through Congress. And there was all this worry that people were sending money to Europe that would end up in some Iranians' hands or some Iraqis' hands that would go to buy weapons, that would support the bad guys that had taken down the towers in New York City. And that was kind of the thought behind it. And, decades passed, people don't remember. It's not as recent in their mind. So now they're willing to say, well, wait a minute. Shouldn't we help the small business person by letting them do these transactions?
Yeah.
Like I said, it used to be at a minimum order on a stock transaction, was you had to buy 100 shares. If you didn't buy 100 shares, it was called an odd lot. You had to pay a special odd lot fee because you didn't buy 100 shares. And shares were priced in eighths, 1/8, 2/8, a quarter, 16 and a quarter, 16 and 3/8. Now they're priced in pennies, right? And they've come up with all these new technologies. So, like, for example, in Robinhood, they use something called payment for order flow, PFOF. And what that does is they take the order that you put in for 1 share or 2 shares, or in some cases, it's a fraction of a share. Like Amazon's $3,300. So you say, I'll buy a half of an Amazon share. They take that and they put it up with like a Citadel, and Citadel wants the volume so much that Citadel doesn't even charge you for the transaction, doesn't charge you a commission at all. So now we say, okay, here's something that didn't even exist, but how can that help you? How can, could you use that in some way in your business, right? Or how could these tools, these things like Square, PayPal, Venmo, how can they help you be more successful? And then think about what your limitations are, what your struggles are as a business person, and try to figure out, how could I use this?
Yeah. Yeah, absolutely. I drove through a Dutch Brothers coffee a few weeks ago, maybe a month ago. You ever been to one of those?
I'm not a big coffee drinker, Manny.
Well, I was driving through. I was going to pick up some stuff for the family, and I had a bunch of cash. I had sold something, and I had cash, so I figured I'd just use my cash. And I'm in line, and then I look over and I see a sign that says "No cash accepted." So I had to use my debit card. But it's just interesting. And I asked the woman who attended me, I said, "Do you guys accept cash at all?" And she says, "No. It's a transaction that's only on your bank card."
Yeah.
And so for them, going to the next level and figuring out a Venmo account or a Zelle account or something that you can also pay even makes it easier. So now you don't have to carry around your wallet with your credit cards in it, your debit cards. You just take your phone. Everybody's got their phone on them all the time. Use that.
Right. And so I have, we have business insurance, Manny. And the thing about, I go way back to the day when I bought insurance from an insurance agent. And increasingly, that's not even part of the real world. I mean, I don't know who goes and buys their auto insurance or their homeowner's insurance from an agent anymore, right? Because if you even get a hold of an insurance agent somehow, which like Farmers and State Farm and Allstate still run ads for those guys, they're not, the first thing they're going to tell you, they're going to ask you how big your stock portfolio is. Because they're going to want to say, look, I don't make any money off selling you insurance. I got to sell you. I got to get into managing your portfolio, get you into some kind of a fund that I can get a commission on. So I need your money to invest there. I need your life insurance. I need you, or to buy an annuity. They're out there to sell you all these other products. And so what do? We've all turned to doing it online. But it also means that you're foolish to go around with your business uninsured. Why would, if you've got a business and you create liability because you make recommendations or you deliver a product or a service, you might say, well, I just, I'm an Etsy person and I'm out there making, where I put embroidery on somebody's shirts or something like that. And you say, why would I need insurance? Well, you never know. Somebody might take that and the thread could come loose and somehow they could get injured. And then they come back at you and say, your embroidery caused injured me, or your embroidery damaged the shirt. And so the shirt was worth a lot of money. I ordered 100 of them, and now you've damaged 100 shirts. And, so I want my money back on all of this. And you start saying, okay, I didn't think I need insurance. Well, but the reality is that you probably do. Then you'd say, well, I don't know where to get it. That's what the internet's for today, right? Now
Exactly.
You can get the insurance, and it's affordable. That's the other thing that's just so interesting, is that the cost of these policies are nothing like they used to be, right?
No.
You have fewer hands in the pie and more spread of the risk. And so the rates are considerably lower. There was
That's
just
true.
an article last week about the Northern Trust. So this used to be what we called, a real high-end bank in Chicago. It was one of those places where you had to have $100,000 to open an account.
Yeah.
It was the Northern Trust, right? For people so wealthy, you had to have a trust if you were going to do banking business with them. They're the last bank practically in Chicago. I mean, everybody else is Bank of America, it's Wells Fargo, it's J.P. Morgan Chase. None of those are headquartered in Chicago anymore. So for headquartered bank, they're the largest. They came out and had to admit they make no money off taking deposits and lending to their customers. There's no money
Is
in
that
that.
right?
Yeah. So said, if we can't tell you other services, primarily, what are we talking about? Stocks, stock trading, bonds,
Yeah.
getting into all derivatives and all that stuff that a JP Morgan Chase would do or a B of A does. If we can't get you to do that with us, then it's not worthwhile for us to take and have, your $1 million deposit account or to loan you, $1 million so that you can buy a second home. There's just no margin in that.
Yeah, it's remarkable. These banks need to be really looking at the spending patterns of the 25, 30-year-old, as they start to enter the workforce. The whole dynamic's changing. I mean, if you look at the trends for even home ownership, right? Right now, we're in a big real estate boom. But, I mean, a lot of the trends are sort of signaling that the single family home is going to flatten down, and you get the multifamilies are going to start to kick in as people don't want to buy anymore or don't have the ability to buy. So now they're going to live in apartments and condos and other things. So it's all of these big moving trends. And as a real estate person, as a banker, as somebody that maybe services those markets, like a lawn guy who goes out and does lawns for people, each one of those has to be looking at the trends and seeing how they can adjust and be where the market's going, not where it is. They make that mistake, and then they're sitting there with holding their, not any ability to go out and do what they're doing if the trends are changing.
We get stuck in our minds fighting the last war. And we remember how things used to be and the problems we used to have. And then we sort of think that there's still going to be the problems we're going to have in the future. So, for example, when I was in college, we had the great inflation era of the 1970s, Jimmy Carter, interest rates went crazy. It continued into the 1980s with Paul Volcker as head of the Federal Reserve. And mortgages had 18% interest rates on them. And so people remember that. Right. And as they remember that, they start saying, well, I got to be very cautionary about, what should I do with getting a mortgage or a second mortgage or a home equity loan, et cetera. Yeah. But the reality is, if you look at the trends, we broke that back long time ago. We now have much more sophisticated tools at the Federal Reserve. The monetarist influences come in. It better explains how you should manage money. The heads of the Federal Reserve have been very stable, very good at managing the money supply, both domestically and internationally. And we've gotten into where now we have very long periods of low interest rates. So that notion of being afraid of borrowing money because your interest rate's 16% or some huge percent, that's gone. It's like you said, mortgages, you can go out and get a mortgage now at record low rates, right? You get 2%, 2.5% mortgage. Why wouldn't you? My first mortgage was 17.5%. Can't buy much of a house with an interest rate at 17.5%.
Yeah, no doubt.
But why not? If you're a business and you don't have enough capital, sometimes you got to borrow money. That's not a bad thing. And the thing is that, like we said, in the old days, you'd have to go in hat in hand, sit down with some loan officer and treat you like you're some kind of a punk. And, it was just a very unpleasant experience. Not anymore. Show them your cards again, Manny.
Yeah, exactly. All online, man. It's insane. Yeah. So it's interesting that you talk to a small business owner, especially during the COVID situation here. They all have a lot of challenges. But it's those that are able to adapt to the trends, to what's happening. Those are the ones that win, including some of these places downtown here that were able to work with the city to create outdoor seating places where there was none, or places that now serve basically drive-through only or walk-up only. There's no in restaurant seating. So you've got to adapt. And today it's the pandemic. Tomorrow it'll be something else. It'll be some new trend. Maybe in the future, there'll be autonomous cars that are driving around. So you got to manage those and be ready for those if you have a drive-through business, for instance.
In this podcasting series that we've done, we've been at it several weeks now. We kind of take a random walk through trends because we're always looking at current events and trying to explain those, how they're beneficial and what they can tell us for entrepreneurs. But a lot of people out there say, well, I need a more systematic approach. I don't understand, what trend should I pay attention to? How would I link to it? What do you mean tie it to my business? These things that fire off in our mouths, Manny, you and I, we talk about it. It's so easy for us. But a lot of people, they struggle with it. And, that's where I think our course comes in. We put a lot of energy, we put a year into developing that course to go back and say, systematically, couldn't you approach the growth of your business? Couldn't you systematically analyze trends, systematically apply it to your business? And I think the 20 some lessons that we were able to put in place, I think it gives people a really, really good set of tools to get after that problem.
Yeah, it's a deep domain dive in the brains of you and the researchers over those 12,000 plus case studies. And it really brings to light a process to go through and adjust your mindset to think like an innovator. It's a really different mindset. Steve Jobs and Elon Musk and all these popular, very successful entrepreneurs, they just think differently. They're looking at an opportunity where there is none. Nobody saw 20 years ago, oh, we're going to do electric vehicles. I mean, they tried, but it didn't really go anywhere. It took somebody like Elon Musk to say, okay, in order to do that, now's the time because the trends are aligning in that direction. Now I'm going to do this first, lay the foundation of the charging stations. Now I'm going to do this. Now batteries are ready to go, and then bring those all together in order to have a successful launch of a company.
Yeah, Sir Richard Branson started off selling records through mail order, and now look, he's worth $9 billion, I think it is, and he's made a lot of people very wealthy. And if you take a look at what were the tools he used, how did he study trends, how did he make decisions about his investments, and you see that he basically took what was the easy route. But the easy route is often hard to see because of our biases and blinders. The things that we've got in our heads that came about from something we read as a kid, something a mentor said to us along the way, an early job that we had, and so those biases stand in the way of us often seeing the easy way to go. What should I do here? What could make this, a fun, easy, high profit experience for us? And I think that's where the systematic approach of the course, think like an innovator, is very, very helpful because it gets you out of that box. It allows you to get outside the box and think so that you start to see things for what they are, not for the way you've perceived them to be based upon the assumptions that you have.
Yeah, we're excited to be releasing this course this week, and please visit our website at SparkPartners.com for more information on the course. And certainly we thank all of our listeners and audience here for being part of the show. Adam, have a wonderful week, and we'll be in contact very soon.
Thanks. Look forward to it.
Cheers.